Good morning, everyone, and TGI Friday. It is Julie here with your TipRanks pre-market morning update, bringing you everything you need to know before the market opens. So let's get into it. Alright guys, welcome back. Thank you all so much for being here. Happy Friday. Of course, this morning we'll be taking a look at exciting stock market news, notable earnings reports, and the morning's biggest gainers and losers. Just before we get into all of that, this is your friendly reminder that if you enjoyed today's video, make sure you hit that thumbs up button and that you're subscribed to the channel as well. Okay, getting right into this morning's exciting stock market news. We are ending the week with U.S. stock futures in the red. Currently, Dow futures are down 0.4%, S&P 500 futures down 0.48%, and NASDAQ futures down 0.63%. The drop comes after the Labor Department announced that the CPI, or Consumer Price Index, reached an all-time high in January, with inflation being at 7.5%, the highest in the last 40 years. FUBO TV announced that its subsidiary FUBO Gaming was able to obtain market access agreements for its FUBO Sportsbook in 3 additional states. Those include Mississippi, Louisiana, and Missouri. With these agreements, the company has secured access to a total of 10 states. FUBO TV will be able to provide mobile access for sports betting across the states with the launch of their FUBO Sportsbook, subject to obtaining required regulatory approvals. The FUBO stock is currently rated a moderate buy with an average upside of 132%. It was a rough day for the ASTR space stock yesterday after they failed to put NASA satellites into orbit. The rocket of the California-based company was carrying 4 miniature research satellites for NASA, or CubeSats, 3 of them from public universities and 1 developed by the U.S. Space Agency itself. The company failed to deliver its first commercial payload, sending the stock down about 26%. Analysts currently rate the ASTR space stock a moderate buy with an average upside of 79%. Electric vehicle maker XPEV plans to open self-operated retail stores in Europe. They've also signed partnerships agreements in the Netherlands and Sweden to help expand their presence. The chairman and CEO of XPEV said that we strongly support the EV development strategy in Europe and are forging partnerships with top-tier local players to accelerate energy conservation, emission reduction, and electrification in Europe. The company has signed an agency retail collaboration agreement with Netherlands-based automotive retail organization Emil Frey, along with Swedish automobile dealer and distributor Billa. The XPEV stock is rated a strong buy with an average upside of nearly 52%. Now, moving over to notable earnings reports. In the pre-market this morning, we'll be hearing from Under Armour, Goodyear Tire, and Enbridge. Last night, we heard from Expedia, who came in with mixed results for their quarter, having earnings surpass expectations but revenues miss. Expedia reported quarterly revenues of $2.3 billion. That was up 148% year over year, but did fail to surpass the consensus estimates of $2.31 billion. Their quarterly earnings per share stood at $1.06, which compared favorably with a loss of $2.64 in the previous year, and did top the consensus estimates of 70 cents per share. The Expedia stock is currently rated a moderate buy with an average upside of over 5%. We also heard from Upwork, who delivered solid results for their quarter. Their revenue grew 29% year over year to $136.9 million, exceeding consensus estimates of $131.8 million. They posted a non-GAAP net loss per share of 5 cents, which was in line with the consensus estimates, but declining from a non-GAAP net income per share of 6 cents delivered in the same quarter last year. Analysts rate their stock a strong buy with an average upside of 49%. And we also heard from DDOG, who delivered outstanding third quarter results and guidance ahead of analyst expectations. Their adjusted earnings of 20 cents per share more than tripled year over year and massively beat analyst expectations of 12 cents per share. Their revenues jumped 84% year over year to $326.2 million, exceeding analyst expectations of $291.48 million. Analysts rate the DDOG stock a strong buy with an average upside of nearly 21%. Now let's take a look at which stocks are this morning's biggest gainers and losers. Our biggest gainers this morning are led by Zillow Group, both Class A and Class C shares. They're up after they reported record revenues. Trading under the ticker Z and ZG, the stock is currently up nearly 14%. They're followed by HubSpot under the ticker HUBS. Their stock is up over 8% following their Q4 results. And the GoDaddy stock under the ticker GDDY, they're up 7.7% following their Q4 results. Our biggest losers this morning are led by Blackline, following an earnings miss in their Q4. Trading under the ticker BL, their stock is currently down 15.5%. They're followed by the Confluent stock under the ticker CFLT. The stock is down nearly 11% following solid quarterly results. And the Glaukos stock under the ticker GKOS, their stock is down over 10% after they announced some executive leadership changes a few days ago. So that is going to be everything for Friday's pre-market morning update, getting you up to speed with what you need to know before that opening bell. If you made it to the end of today's video, make sure you hit that thumbs up button and say good morning in the comments down below. I always love hearing from you guys. Thank you all so much for watching. I hope you have a wonderful weekend, and I'll see you back here next time.